What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we continue to see more volatility as we continue to get through this earnings season. Remember that volatility works in both directions, and we're definitely seeing volatility in both directions on many different stocks. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did finally see another red candle, and we did close near the low of the day for the second day in a row, and we did see SPY going down 0.44% today, getting rejected right at our resistance level at 457. So remember, last night I said the highest probability chance is we're going to get a pullback from 457 before we see any more upside. So that's exactly what we're seeing, but the question is, how far are we going to pull back before we break through and get to that price target at 460? We still do have higher to go in the stock market, so this is not like we're just going to call a top and say 457 was it and we're not going any higher. I just simply don't believe that's the case. So like the bears continue to learn, you don't want to call a top in a strong bull market. So we're definitely not even going to talk about the possibility of a top at this time. So now that we're pulling back from 457, you need to watch the price action very closely at these support levels. We could bounce off of the 5 EMA, which is where we closed today. We could come back down to support right around 453, which is our previous all-time high, and potentially bounce off of that level. Or we're more than likely going to start closing the gaps at 450 or right around 447, which is our strong support level at 448. So you essentially have three very strong support levels you need to pay attention to, and one of them is just below where we closed today. So there is the possibility that we start to bounce as soon as tomorrow. I think the highest probability chance is that we close at least one of these gaps, which means we could see SPY getting down to at least 450. Now don't forget, we still have Apple earnings and Amazon earnings after the bell tomorrow, so that's going to be a catalyst on which direction the price action goes. If those earnings don't quite get through expectations and we don't see strong guidance, we could see SPY coming all the way back down to our 50 EMA level of support right around 443 to 444. I don't necessarily think that's what's going to happen, but if we get bad earnings reports, we could see price actions starting to punish the bulls, and we could see a sharp pullback. So far, earnings are going very well, and we did see Microsoft and Google breaking out to a brand new all-time high, and those are definitely market-moving stocks. If we see stocks like Microsoft and Google breaking out to all-time highs, now is not the time to be getting bearish, because we still have Apple, which could very likely also break out to an all-time high, and we already know that Apple is a market-moving stock. So look at the broad market and understand the price action, because when Google and Microsoft are breaking out to all-time highs, you don't want to try to call a top and you don't want to get overly bearish. So this is just a pullback before another leg higher. So continue to watch upside price targets at 457 and 460 if we do start to bounce off of any of these support levels. We're very close to having the full bull trend, because about 1 or 2 more days of positive price action, we're going to see the 20 simple moving average crossing above the 50 EMA. So once we have the full bull trend, that is the universal signal that the bulls should be buying the dip, and that's only going to make this bull market even stronger. It doesn't mean we can't pull back, and it doesn't mean we can't dip down lower. It just means the trend is very bullish, and we already know the trend is very strong on the monthly and weekly charts, and it's about to be back into a full bull trend on the daily chart as well. So I tell you this time and time again, don't try to call a top and don't try to short a strong bull market, because shorting is very difficult to do, because you never know how high these bull markets can go. If you are shorting, short at resistance and take your profits and don't get greedy. If you're holding your short positions for way too long, you're just going to get caught underwater in a losing trade as the market runs away higher without you. On the NASDAQ 100 QQQs, we were up 0.23% today, and we did get rejected at the previous all-time high of resistance, just below 383 yet again. Intraday, we did print a brand new all-time high, but we really need to see a breakout and a close at brand new all-time highs to verify that we are getting to that price target at 388. So obviously Amazon and Apple earnings will have a lot to say about whether the QQQs close at a new all-time high, but it definitely looks like the bulls are trying to get there with the price action we saw intraday. So watch that strong resistance area just below 383, and on a break above that, we should have a quick trip to 388. Downside support for the QQQs will be 378, 373. The breakout level is also right around 372 to 373, and we have strong support around that 50 EMA of support around 370. Just like with SPY, we're very close to having that full bull trend, so we will see the bulls buying the dip. When you have the bulls out there buying the dip, it's going to take a lot of downward pressure to send us below support. So watch these support levels closely, because if they're holding up, that is a buying opportunity as we continue to run to brand new all-time highs. On the Dow Jones, we were down 0.7% today, and we did see a very bearish looking candle, but we did close right on top of a support level at 355, and we're only one day away from having the full bull trend. So when you have the full bull trend and you're sitting on top of support, there's always the possibility you see a bounce. So we could bounce off at 355 and get to that new all-time high price target at 360. Now, if we break down below 355, look for support at 351 and the gap close and 50 EMA of support at 349. So as you can tell, all three indices look like they're very close to having full bull trends, and we are seeing price action testing very strong support levels. So with the full bull trend, you're going to see buy the dip in the Dow Jones and across the board, so we could still see the stock market make that next leg higher. On the Russell 2000, we did see another massive sell-off today, going down 1.84%, and we did break back below that support trend line. Now, this isn't as bad as it looks for two reasons. One, the Russell 2000 does have the full bull trend, and two, it's sitting right on top of a very strong support level. We're sitting right below the 20 simple moving average, right on top of the 50 EMA, and right on top of the gap close. So while it is possible we go close this gap, which is just below at 222.6, and we also still do have strong support at 222, it's equally possible that gap never closes and we bounce off of this level as soon as tomorrow. And don't forget, we did open a gap above. That's all the way up there around 227.8. So when there's two gaps open, you never know which gap is going to fill first. But the more likely probability is that we are going to go ahead and fill that lower gap and then possibly find support right around 222 and then bounce to go fill that gap higher. So with the full bull trend, there will be buyers of this dip, and we do know the small caps have the advantage of doing very well in the month of November. So this is a great buying opportunity for the long term, especially with that upper gap, even if you just wanted to make it a trade. However, you still need to follow the price action, because if we start breaking back down below 222, that is going to look like the Russell 2000 is a lot weaker. So these are very bearish looking candles, but we still have the bull trend sitting on top of support, so you can't rule the small caps out just yet. If we break back down below 222, things are looking a lot worse for the bulls, but we still will have the support level right around 219. To the upside, look for that resistance breakout level yet again right around 224.5, and the resistance levels are 226.5, the gap close at 227.8, and resistance at 229. In the ARKK ETF, we were down over 2% today, and we see the ARKK ETF starting to sell off ever since we hit that resistance level right around 123. We're back below 120, and the next support level will be that 50 EMA, which is right around 117. Below 117, it's very likely we could come down to close this gap, which is just above 113, so watch that level as the next potential support. Below that gap fill, if we continue to go lower, you're looking for 109 and 106 as the next possible support levels. To the upside, you have resistance at 120, 123, and 126. On the VIX, we were up over 6.3% today, and we are finally starting to see that spike in volatility, which we did expect to see because we saw the VIX getting down here in the support level right around 15. Remember, completely normal volatility is anything below 18.2, and we do have the resistance trend line, which is right around 17, and the VIX closed right about at 17 today. So this is still just completely normal volatility, and we see pullbacks in all bull markets, and they're usually a buying opportunity because you know you're about to bounce and go to that next leg higher. So as long as the VIX is staying below 18.2, you still want to buy the dip and you want to stay bullish. If you see the VIX getting back above 20, then you're looking for possible a deeper pullback that could turn to a stock market correction. So right now, the VIX bounce is to be expected, so watch to see if things go from bad to worse. Otherwise, we could see the VIX getting rejected at 17 and getting crushed back down to that support level at 14, which would send us to a brand new all-time high. On Bitcoin, we're currently down about 2.2%, and we see Bitcoin sitting right on top of that support level right around 59,000. Remember, Bitcoin needs to hold this support level at 59,000, or we could be coming all the way back down to the 50 EMA of support, which is right around 54,000. We're still holding the bull trend, but the bulls need to start buying the dip at these levels. Otherwise, we could lose the bull trend and Bitcoin could get stuck in a sideways consolidation. There is one more strong support level I want you to pay attention to, and it's basically at 56,000. And if we break below 56,000, we could be coming all the way back down to about 53 to 54,000. As long as we stay above 53,000, Bitcoin is still bullish, but we will likely lose the bull trend, so we could get stuck in a longer sideways consolidation. We need to break back above our resistance level at 60,000, and then we could start to break out and reattempt that previous all-time high at 67,000. If we break out to a new all-time high, the price target will be 75,000. On Amazon stock, we were up about 0.5% today, and we still see Amazon struggling to close above that resistance level at 3,400. We're back above all the moving averages, so the price action is bullish, but we don't have the benefit of a bull trend, and the price action is failing to break resistance. Remember, I told you going into earnings, if we don't get that impulsive rally to close the gap, you want to be a lot more cautious because it's possible Amazon just gets rejected off of 3,400 and comes back down for that next leg lower, which will take us to 3,185 or 3,136. So without a doubt, this does not look impulsive, and now you're depending on earnings to get that good news to send you higher, and I just don't like the odds going into earnings expecting there to be good guidance and good revenue when you don't know exactly what the price action is trying to tell you. So I'm very neutral on Amazon, and I don't think you should really gamble on this stock through earnings unless you're definitely in it for the long haul and you don't mind holding through a downturn. So right now, I would say be cautious on Amazon stock because it can't close above 3,400, and we have earnings tomorrow after the bell, so it's just way too soon to call. So watch resistance levels at 3,400, 3,452, 3,500, and 3,552, with the downside support levels at 3,365 and 3,311. If we break below 33.11, we're very likely going down for that next leg lower. So watch 31.85 and 31.36 as the next possible leg lower of support. On Tesla stock, we continue to see Tesla looking bullish, and we do look like we're getting that bull flag look. Tesla was up 1.91% today, and we still see Tesla hanging around this resistance area at 1050 and 1080. The price action is not getting that blow off top, and remember in the blow off top, we should have came down just as fast as we went up, and we should have came back down to about 900. We did not see that price action just yet, so it doesn't look like we're going to see that blow off top look. And more than likely what we're getting is that bull flag look, which I was just talking about last night. And this is more than likely going to be the scenario that we find ourselves in. This is going to eat up call premiums and put premiums, and it's going to need a lot of time off the clock to allow this 20 simple moving average of support to catch up to the price. So look for Tesla to go absolutely nowhere for at least a month or two as we consolidate sideways. Otherwise, we're going to break down through this support level around 1,000 and come back down to 962, 943, or the full gap close right around 911. Below that, we still have support at 900 and our 20 simple moving average around 860, so watch those support levels. So real quick, let's switch this over to an hourly chart and you can see exactly what the price action is doing. We're consolidating and we're correcting through time, and we're getting a sort of triangle look that's going to be an ABCDE. That's what it looks like. Obviously, this is subject to change. And on the hourly chart, you can see we are staying above the 20 simple moving average. So look for more of the same with Tesla going absolutely nowhere. So you really don't want to get overly bullish or overly bearish. Just be patient and wait to see which way this triangle is going to break. Right now, it looks like Tesla has plenty of more time to eat off the clock, and this could easily take us out to the early November before we see a decisive break and a decisive direction in Tesla. On Apple stock, we were down 0.31% today, and we still see Apple building this sort of bull flag look right below that resistance level at 150.7, and we haven't yet seen Apple breaking out. However, I will tell you, with Microsoft and Google breaking out to new all-time highs, it is very likely if Apple does well on its earnings that we'll also see a new all-time high on Apple. If we're going to get a new all-time high on Apple, you need to see a decisive break and close above 151, and then we'll have strong resistance at 157. The price target will be around 162 if we do see that new all-time high, so there is still plenty of upside in Apple stock, which tells you there could still be plenty of upside in the stock market. Apple is without a doubt a market-moving stock, and if it's going up to 157 or 160, we're very likely going to see SPY and the triple Qs going higher as well. Now, the counter to that argument is if we start breaking down below 148 and closing below our 50 EMA, which is right around 145, then we're not going to see that new all-time high, and we could see the market start to roll over with Apple stock. So watch those critical levels at 151 of resistance and support right around 148, because that's going to be your first break and tell you the direction that Apple is more than likely going to go. We have that earnings tomorrow after the bell, so we're going to learn a lot, but we definitely see the price action is looking bullish, and we're definitely building up a lot of bullish momentum in the trend. So Apple does look like it could break out and start to run, so watch that critical breakout level above 151. On the financial sector, we were down 1.65% today, and we definitely see a bearish looking candle that closed below the 5 EMA, but we still have a very strong bull trend in the financials. The industrials were down 1.17% today with a very bearish looking candle, but we still have a lot of bullish momentum, so as long as the price action's above the 50 EMA, we could see the industrials still going higher. The healthcare sector was down 0.79% today, closing right on top of the 5 EMA, as we start to see all these moving averages reversing to a positive slope and building up some bullish momentum. The energy sector was down 2.87% today, and we still see the energy sector in a very strong bull trend, even though we are seeing price action starting to look a little more concerning. So jumping back over the S&P 500, you see there's definitely some price action that we're seeing closing at the lows of the day, but we still have a lot of bullish trending. And when you're in a bull market and you have a strong bull trend, you will see buyers of the dip. So I don't think you should try to call a top at these levels. We still have plenty of earnings to get through, and we're very close to having the full bull trend on the daily chart. And we already know we're in a macro level bull market, and this bull market is very strong. So I still do think there's more upside in this market, even though we could be due for a short-term pullback. But that could change with Amazon's earnings and Apple's earnings, and we could get another catalyst that sends us higher. Obviously, if the earnings go bad, it'll be a catalyst that sends us lower, so make sure you're paying attention to the price action after the earnings after the bell tomorrow. Also, don't forget, I have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and I think now is a great time to be a BANC member, and I am currently running a 50% off promotion code for your first month. You can find out all of the details about BANC Trade Alerts and how to join by clicking on the links in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.